Hello, good evening. 2-4 happy hour starts now. Do not adjust your screens. Just shaking up my little Mossman fresh orange juice, along with my Mossman Juices elderberry sea moss. Join us. Have a great talk tonight. Great talk. Great guest. I am ready with everything I need right here. So come and join me. Come and join us. As soon as I get Doc, he's a real Doc on. Let's see what he's drinking. Take notes tonight. It's about finances, sort of. What's up, man?
All right. It's time for the Dog and Pony Show. What is going on here?
Let me just give. Well, first off, pardon me because Lightning are in a do or die situation tonight, so they're on my TV to the right of me. So I may be looking that way. They got to win this game or they're out.
Cool.
But let me give a shameless plug here. Mm-hmm. Thank you to Mossman Juices for giving me. Well, I'm just about to drink what's left of what I ordered, which is a freshly squeezed orange juice, along with some elderberry sea moss that I'll probably be taking in a little bit.
Cool.
So yeah, but I tell you one thing: the smoothies they gave me, really good. I finished those in one setting. I wanted to save it and drink one tonight, but I couldn't. That sea moss strawberry watermelon and the sea moss smoothie and the sea moss peach and whatever else concoction, delicious. I mean, you could really taste it. You could really taste everything that was fresh in there. Let's see how this orange juice tastes. Cheers. Wait, you're drinking it too?
I'm not drinking your orange juice.
Oh, that's good. That's good stuff.
That's
good stuff. Where's my damn game at? Yeah, man, go ahead.
Welcome everyone. 2-for-1 happy hour. Another episode. We're going to be talking about cryptocurrency and NFTs. Go ahead and put that in the comments and pin it right now, Rodney. And then that way everybody will know what is going on when they log in. NFTs. I see Just John on there. I got my drink. We're going to bring them on right now. So
hold on, let me
send the request over because we got a lot to unpack, a lot of layers of this onion to peel back because I'm clueless about, well, not clueless about cryptocurrency. I'm clueless about NFTs. I'll say that. Cryptocurrency, I know a little bit of something about a little bit of something, but yeah. So we'll have him coming on and dive right into this madness called the crypto life. I don't know.
Hold on,
I really don't know.
I'm gonna send it. Yeah, I'm very curious what NFTs mean because I always think NFTs mean no flat titties. So it'll be fun to know what it really means. Or maybe it does mean that. I don't know.
It really doesn't.
Oh. Let's see. All right, let me get him on.
Yeah. And leave that pin in so as the hour goes on, people will know what we're talking about. All right, just John,
let's see. I kind of think NFT. Okay, before you even start, NFT, no flat titties?
No, that's not.
No fat titties.
No.
That's
really not what that stands for.
Yeah, sadly, it's not that. Yep.
All right.
Damn.
Just John McKinley back in. He was on here once talking about his life as a homeschooler into his career now. He is back to talk about NFTs and cryptocurrency. Look here, I don't have an agenda for this. Take it away. I have no clue how you're gonna bring it to us. I have some cryptos that are looking sad right now. I know you have some news about that. So just get into the basics of which one's easier to talk about first, crypto or NFTs, or can one lead into the other, and just kind of go over the basics of those who have no idea what a crypto is, not talking about gangs here out of LA, or what an NFT is. Pretend like we're stupid. Well, pretend like we're ignorant.
Yeah.
We don't know anything.
I mean, you just heard my NFT meaning, so
yeah.
Unless that's right.
Yeah, just because he said that's what NFT meant, I'm gonna start off with NFTs so everybody can understand what they are. But But yeah, to start off, NFT, yeah, it's a really weird phrase. I'm sure people hear about it all in the media of people making millions, like fortunes off of these like JPEG pictures. And sadly, the case is a lot of people have the wrong misunderstanding. So let me just dive into the proper understanding of NFTs. So NFTs stand for non-fungible token. Um, and
Oh, I was way off.
yeah, you were a little bit left field. But yeah, it stands for
Wait, you said no,
yeah,
no, go ahead. Non what?
non-fungible token. Yeah. And the way I like to explain that, because I mean a lot of people don't know what the word fungible means. You could think of like your fiat money, so your dollars in your wallet. That's fungible. Basically, you could break down $100
Oh, damn
bill
it.
into 520s. I can break down a $5 bill again into five $1 bills. You could break down the money into smaller in the smaller amounts, and that's the case. It could be broken down. Crypto is fungible as well. It can be broken down into small amounts. You could buy one Bitcoin, or you could buy, a percentage of Bitcoin. Like a lot of us
Yeah.
probably own, we own some percentage of Bitcoin, but we don't own a full percent of Bitcoin. So that's the similar reasoning between money and crypto. But for non-fungible tokens, how it's a little bit different is these things cannot be broken down. These things are like one of ones. So what I like to think of these as is, say like a Michael Jordan signed jersey. That's a one of one. Like you can't break that down. I mean, you can, but it's not gonna have the same value. You could cut it with scissors. You could disperse it amongst some friends. It's not gonna have the same value. I think another great example is like, a house. Whereas like, a house is usually like a one of one thing. You usually don't, hey, I'm gonna give you like a quarter of my house, like, and then I'm gonna have this other quarter. Maybe if you're renting out stuff, you want to go into detail, but no, it's things that cannot be broken down. So the unique thing about NFTs is it gives people true ownership to things, and this is for the digital world and the real world. So you can see NFTs being used a lot, even in like mortgages, real estate. Right now, it's being used a lot in JPEGs. It could be anything. It could really be anything. A lot of people think it needs to just be like images. It doesn't need to be images. It could be music. It can be. It can literally be anything that can be put on the blockchain. It can be as an NFT, be stored as an NFT.
Now,
Now,
do
like
you
that
have
was
to own the rights of it for you to sell it? So you
Yeah.
said music, and you said images, so you have to own that music, you have to own the image, or I can go out there and clip something off the internet and say, hey, I have an NFT, but it doesn't even belong to me.
Yeah, so you can do that, and that's where
Whoa.
yeah,
Wow.
no, yeah, you can do that, but like that's not an NFT. Like you say, I have
Oh, okay.
say a Bored Ape, right? I'm pretty sure a lot of people are familiar with, like, if you're not, Bored Ape Yacht Club is one of like the biggest NFT collections. I think their floor, which is like the minimal price, is like $200,000, and they're just pictures of like apes. You could Google it and find out more. It's Bored Ape Yacht Club. Um, and by the way, the highest one I think sold for like nearly 1.5 million. So
Oh my God.
I can
Good
copy that
Lord.
image and I could set it as my profile picture and whatnot, but
Uh-huh.
I don't have true ownership of that. The
Right.
real value with NFTs is the utility, because by you having, a contract on the blockchain that says, hey, you own the rights to this entity,
Mm-hmm.
you have true ownership, and you get the benefits behind the ownership. So that's the main benefits of NFTs. So taking Bored Ape, for example, if I just copy the image, I can't do any of this stuff with the Bored Ape NFT. But the utility that the Bored Ape provides, I think they had some yacht parties. They had a meetup in New York. They just did like a metaverse land drop where all the holders got free parcels of land. If you own
Wow.
that on the blockchain, it's records. The blockchain is basically a record of receipts. If you own that, hey, you get the utility, you get the benefits of of this community. And that's the other thing about NFTs. It's not just utility, but it's also community, because it's a very small niche amount of people who own a specific asset. And if you own that specific asset and you all are a very small group, you basically determine the price and the value of that NFT as well. Because again, the community, they design new ways to make it more valuable, more utility. They come up with events. They dictate the floor price. Okay, are we going to put all our apes at like $200,000? That's more so like
capitalism, basically.
Yeah. that's yeah.
I mean, you know, they own it. They can set the price. You know.
Yeah.
Yeah, and that's really the way behind it. But I think a lot of people have the wrong concept with coming to NFTs, because you'll see on social media, a lot on TikTok, where they show like this random animation of something very similar to a Bored Ape, and they're like, "Oh, how much would you pay for this NFT?" And it shows up like a card that says, "Oh, I'll pay like 11 million." And it's like, okay, yes, NFTs, their prices are speculated, but they actually provide some real value. It's not just the image. And in that case on TikTok, it's just the image. And I think people are getting it like messed up in their mind, thinking that, oh, just images alone are worth millions. But it's like, no, it's what that image provides to you.
So let me ask you this question. Hypothetically speaking, I have a picture of my right big toe, and it has a hair that's curled over to the left and another one that's ingrown. I'm not going to get no much money because I'm not nobody. But let's just say it was Beyonce's toe, and she had an ingrown hair. Yeah. Technically, how much more, if she decides to put that image out, or anyone, and they do validate it's Beyonce, and there's a point I'm trying to get to, how much more would her NFT for that photo sell versus mine? Because I can say, hey, I want 500,000. She can say, I want $1 million, and she'd probably get it because she's Beyonce and it's her big toe. And I've heard also ridiculous things like that selling. So I is it really who's selling it and a popularity kind of thing versus the actual value of somebody actually wanting that thing?
Yeah, no, and that plays a huge, like a tremendous part, like the popularity. Because if you did that, sadly, unless you really push like the value of owning a picture of your toe, nobody's gonna want to pay even like $20 for that. But Beyonce, because she's Beyonce and she has credibility, like she's like a celebrity, she has credibility. People pay millions. So funny thing. Just like I feel like this is a great segue to like stupid example of NFT. Like Jack, he sold his first tweet ever as an NFT.
Wait, who was that? You cut out a little bit.
Yeah, Jack Dorsey was the founder of Twitter. So he sold his first tweet as an NFT, and I think it sold for like over $1 million. And that's the case. Why? Because he founded Twitter. There's like credibility behind it, and there's hype behind it. So there is kind of like a hype scene that drives the value, sadly. But this is the weird case about NFTs and why it's such a tricky space. Because I want to say first, it's super early. A lot of people are still missing the big picture NFTs. They think it's like, oh, this hype thing, or I can just, if I'm like famous or I got a lot of credibility, a lot of following, I can just sell pictures of things and I can make it run. And a lot of celebrities that get involved with NFT projects, they're doing this. And I tell anybody that if you want to get invested into NFTs, I would red flag projects that have celebrity influence, because they know what they're doing. Like they are in the celebrity's image to build your trust and the credibility, so you spend more money. Versus if they're nobody, you probably wouldn't even meet the eye. But the case for like a lot of these projects is that they're sadly rug pulls. The majority of celebrity projects are rug pulls, and if you don't know what rug pulls are, it's practically what it's like when they pull the rug from under your feet. So you invest some money into a project. Typical NFT go for like.
That's kind of like how my cryptocurrencies right now. Yeah, they pulled the rug from under my feet.
Oh no, it's a bit of a difference. It's a bit of a difference.
Oh, okay, good.
Well, before you get into that though,
yeah.
Sorry, I was gonna ask, how do you start with NFTs? So I know you mentioned about you can sell something. What if we were to sell our first show ever, like the dude did in Twitter? Like, is that considered an NFT?
Yeah, that it can be considered an NFT. It absolutely can. But the main thing that people should be thinking about, like especially if you want to create NFTs, is what value can I provide to the holder by them buying this. So if y'all sold this, if you screenshotted this right now or sell it as an NFT, what are you backing behind it to say, hey, this has value? You could be like, oh, we're gonna host a virtual podcast in the metaverse and you get like a free ticket. That's one way that this can go. Or hey, if you own this NFT, sometimes they do raffle, like in a raffle to get a free t-shirt. It needs to be some type of correlated value to back it up, pretty much.
Okay.
Ooh, well, I'm confused.
Well,
okay.
Yeah. Well, how do you? Well, my thing is like, how do I find this NFT? Like, how do I find someone to sell this to, or to even look and see if I want to buy something? What
like
is there like a website?
NFT eBay site instead of eBay is InBay. I don't know.
What? Really?
I'm just I don't know.
Oh, damn it.
Yeah, no, they should really create eBay. Yeah, I would say the eBay.
Right, that can be an NFT. Bam.
Hey, it could be an NFT.
Yeah, let me write that down. Okay.
Please write that down. Cause my brain ain't shit. Please write that down.
But no, like the main place you could go to find NFTs, like the main marketplace right now is called OpenSea, and the website URL for that is opensea.io. And on there you can view different NFT collections. But this is one thing I do want to say is that be careful going on there, because sadly, like, again, I just really want to stress this. We're very, very early into NFTs. This is almost like when the internet was initially invented, like many years ago. This is a very weird space where people are trying to make quick bucks. And sadly, a lot of these projects, it's actually predicted that 99% of NFT projects will be non-existent in 5 years.
Wow.
Good Lord.
Yeah, and it's mainly because you'll see that, and OpenSea has even stated this, that majority of the projects on their platform, a lot of them are like replicas, spam projects, or rug pulls. They just want to get your money and then just dip out. So ideally, you want to invest into blue chip NFTs. It's a concept in the crypto community where it basically just means it's more reliable. Like it actually holds the value that you invest in it. And I would even go as far to think of NFTs as companies. So when you go on this OpenSea website, you're gonna see a lot of stuff. But when you think about buying one of these, you need to be thinking about it from like an investing standpoint. Like literally, like you're buying like stocks, or like you're on the shareholding team for a certain business, because that's what NFTs basically do. When you buy that NFT, you enter that community and you help drive decisions in that community. But if they have bad leadership and if it's a toxic community, it's gonna go nowhere. Like 99 times out of 10, you're just gonna lose your money. But I know I'm going a little bit left field, so let me go back. But yeah, OpenSea is a great website to just start looking around at what NFTs to look at. If you want to check out.
Spell it, because I think I made a mistake and I just got porn pulled up. What is it? Open what now?
That's because you didn't clear your browser.
Actually, it's because I put a T in there instead of a C. So, okay. What? Spell it? Oh.
OpenSea. OPENSEA.
Ooh, I was way off.
Yeah.
Ooh, I was way off. Okay, like open seawater. All right.
Yeah.
Okay, I was so wrong.
Yeah, they're the biggest.
There it is. Yep.
Yeah, Yeah, they're the biggest platform. Like, there's many different NFT platforms you can go on, but like this is the core main one that majority of the community is on. And if you want a more interactive, I guess more cohesive like marketplace to also view, I know Coinbase, they just launched their NFT marketplace. So you could
I've heard
Google.
of Coinbase.
Yeah, I know a lot of people already own crypto
Yeah.
on Coinbase. So you could
Yeah.
check out Coinbase NFT as well. But the thing about Coinbase is their trading volume is only a fraction of what they're trading on OpenSea. So all of the main stuff, all the action is happening on OpenSea. So you want to be where the action is happening. But sadly, where the action is happening, that's where a lot of scams are happening too. So you got to just keep a clear eye out. But to filter through all the mess on OpenSea, if you want to like immediately look at some of the blue chips, this is a pretty reliable method. If you go on OpenSea's website, there's like a little tab where you could see like something called stats. If you click that stats button, it'll take you to a screen, and then you could see basically like top ranked NFTs. And
Oh, I see it.
yeah, and you probably see stuff like Bored Ape Yacht Club, Mutant Ape Club, Other D Side, Other Side D.
Azuki. I see Azuki and Beans.
Is that, yeah, Azuki. Azuki has a lot of controversial stuff. I gotta come to that later. But
Is that porn?
There's an NFT for that, but you just gotta you gotta find it. There's NFTs for everything.
Okay.
Do not give him any ideas. Do not give him any ideas.
These names, dude, we can come up with some of these names. They got doodles, moonbirds, okay bears. I got a bear right here.
Yeah,
come on.
Big collection, and if you click on them, like their minimum NFTs is selling for like $50,000. Yeah, a lot of those collections that you see in the stats on OpenSea in the top 10. But the
Ragnarok, CryptoPunks, wow.
I mean, let me ask this question though. Who and who's ever going to be watching this, please forgive me, but who are the idiots buying $50,000, however much that NFTs that, I mean, what is it really going to do for you by owning $50,000 or $100,000 or however many thousand? What is that doing for you? I mean, I can't see it, you know, because I'm in the stocks. I have stocks. I have crypto. But NFTs, like, okay, now I bought a $50,000 NFT. It's in my back pocket or in the virtual space, whatever. What is that doing for me later as far as an investment?
See, that's a great question, because it's not just the image. It's the utility behind it that brings value to you as a holder. So, for example, I think one of the collections out there, I forgot the name of it off the top of my head, but I think it was like Kaizu Kings or something. Mm-hmm. Their NFTs selling for like 20, 30 grand. And you're like, why would you buy, you know, a digital picture of dragons? Right, their NFTs come with a specific utility where it generates their token as you hold it every day. So just holding it in your wallet, you're getting passive income by holding by holding the NFT, which generates let me explain this again. The NFT generates basically cryptocurrency for you every single day. And you holding that over time, say up to a year time span, you could have just as much money in crypto as your NFT. Like, it's stuff like that that brings NFTs value. So some they literally generate money. Some allow you to dictate how metaverses are going to function. So like Bored Ape Yacht Club, they're creating their own metaverse called The Other Side. They're getting a lot of free perks just by holding that. They're getting free land. That's more metaversey stuff. But it's literally the value that it provides. Like, some of them allow you to meet like Gary V. I don't know if y'all are familiar with Gary V. He has a collection called V Friends. He's big social media influencer marketing. Definitely take time to Google him if you got some spare time. But his NFT holders get to meet him in person. Like, he's hosting an NFT conference. Only his NFT holders can be there, and he's gonna have high-level speakers and traders all across the community in that one group. And just to give one more example, like I own one of Prince Donnell's NFTs, Kangaroo Heroes, and in that one, it teaches you like financial literacy. So it's like literally a small community that focuses on growing you financially. So they have people coming in talking about how to do swing trading with crypto, how to do real estate. Like it's like literacy in all these different areas. So that like that's really the main value behind, okay, like, hey, I have this NFT in my pocket. You know, what kind of value does it bring me? It's literally what it's the utility, like what you can do with it. But I do want to say that it's not the case, and I don't think it's gonna be pretty standard that a lot of these NFTs, the majority of NFTs are gonna be like $50,000, $60,000. We're just really early. We're really early right now. And when you're really early, things, yeah, you experiment with different pathways with different things. But yeah,
So
sadly, majority of the NFTs, they probably won't be worth that much in the future because 99% of these projects will fail.
so how I'm not saying predict the future and say how will we know which ones. I mean, at what point? It basically is like buying stock. You're taking a risk, or buying crypto. You're taking a risk based on some current event, which will drive you to purchase more or sell it at that given time. I don't know what's going to happen with the six or seven cryptocurrencies I have 5 or 10 years from now. I bought them dirt cheap. Who knows? I don't know what's going to happen to them. But basically, like you said, in 5 years, 90-something% will be just gone. So all the people that put that amount of money into it, which in my opinion is ridiculous, in my opinion, they're going to be out that money. I mean, can you sell it? Like at a point, it's like, ooh, you know what? Like stocks, I want to sell my NFT. Like, is it something like that where you can like get rid of it at any time, or you're kind of stuck with it?
Yeah, so you can list to sell it at any time, but if it's actually going to be sold at the price you listed it, that determines if somebody wants to buy it or not. And typically, if you want someone to buy it right away, you're going to have to list it below the floor price, the minimum price that NFT collection is at. But yeah, like, sadly, the majority of the community has lost money in NFTs. Yeah, it's really bad. Like, I think they said, even this OpenSea even came out and said this, like 80% of the community like controls like the top NFTs pretty much. Like it's the same people kind of investing, reinvesting like back into this cycle of things. And then you have like these newcomers that don't know anything about the space. They're like, oh, I'm hearing the craze, let me just buy something, and they're just buying anything. And they're like, huh, I bought an NFT for like $1,000, but the floor went backwards and now it's only $200. Or Azuki, a perfect example. You brought up Azuki. It's a big controversy with them going on because it's basically like an anime NFT. And I think their floor price was around like $10,000, $20,000. I think it was even higher than that, $60,000. But it literally dropped more than 50% in a day, like the floor price. And you're like, yeah. And you're like, why would something like that happen? I mean,
first of all,
yeah.
why would I spend $10,000? I'm not talking about a share. I'm not talking about a percent of a coin. I'm talking about an NFT, and I'm going to spend $10,000 on that, not knowing where the heck it's going to go. And the next day, it drops 50%. You've just lost $5,000 in a day. That's ridiculous.
Yeah. For some people, it was more than 5,000. Like,
oh my god.
Yeah, it was more than 5,000 for some people, and I think that's why you really have to see NFTs as a business investment. Like, you can't just blindly say, "Hey, I'm gonna buy this NFT." I would look at what is the leadership? Like, you need to know the leadership. Are they docs? That's a common thing in the crypto community. Have they revealed?
Wait, docs like him?
Dots.
Yeah, what do you mean?
Oh,
Dots like
dots. Oh, dots. Like DOXX. Like
Oh,
they're
okay.
basically they've exposed their identities. Pretty much. They're not like just showing cartoon pictures to you saying, hey, this is the CEO, this is the tech lead, and this is the
oh
because yeah, often in those cases, the ones that just show you cartoon images or not revealing their identities, it's very common that those are scams, rug pulls, where yeah, yeah, they're not showing because you know they're not showing their identities for a reason. Like you're paying $600
Yeah.
at Mint, and yeah, they just go, oh, thank you for your money, guys, and then you get
And
the
they're out.
image. You get the image, but you don't get anything that was promised or comes with the image. So that's why I'm saying you got to really see it as like a business investment and like really do your research, because they could promise the world with all these new NFT projects saying,
Mm-hmm.
I hate to bring them up, but he did this recently. Takeoff, one of the Migos, he has an NFT collection, and he promised he's gonna take one of the holders to the moon with like Elon
what?
Musk. He promised to raffle off land in the metaverse. And it was some other benefits, like to meet him for like a in-person concert. But
Mm-mm.
they did the mint. They were active for a few days, and this is often the case for a majority of projects, and then they just dip. So that's what I'm saying. Like celebrities is often a red flag, but you really need to do your
Mm.
research behind who's leading this effort. Have they revealed their identities? Even if they're celebrities, they revealed their identities. I would still be very hyper cautious still on that step. Yeah, and there's more steps that involve in that, like with looking into the identities, like looking at the community. Is the community toxic or not? You want to make sure the community is pretty healthy. They're like a build driven community. And I'm not gonna lie, you're gonna run into a lot of kids on here. They're investing and they're getting rich out here, but you want to make sure it's not a bunch of just like kids just spamming the chats and the discords all the time. You want to make sure it's an actual community that can build something behind the project. Yeah, I can keep going on and on for things you should look for, but I think the number one thing is checking if the team is docs. The community, are they toxic or not, and then the roadmap, like what are they planning to do as far as bring value with this NFT. But a disclosure, they could promise you the world. Like Offset, he promised to take somebody to the moon, and he just abandoned his project. Like,
Exactly.
so you have
Ridiculous.
to really do your due diligence, because there are winners out here, but those winners are very skilled at knowing how to do the research to say, okay, you still never 100% know. You really never 100% know. Like Azuki's, that looked like a good project, but then the owner came out, and this is how it dropped. He came out and he said he doesn't even really like anime. How do you create a
Oh
anime NFT and then you tweet you don't even really like anime? And then
yeah.
that was like
Value's
a
gonna go down.
snowball with like
Yeah.
other effects that just drove down that price like more than
Yeah.
50%, like super fast.
So it's at the bottom of the hour, and I want to switch over to crypto soon. So,
Yeah.
so let me ask this question in. When looking at NFTs, cryptocurrency, and stocks, where is the bigger risk for your money that you're putting in? I mean, without you talking about crypto, it sounds like NFTs has the biggest risk outside of stocks. And
Yep.
do the stock market drive both crypto and NFTs up and down?
Yeah.
That's a great question, especially that second one. So I'm gonna be totally transparent with you though. I think everybody will have a personally opinionated answer to that question.
Mm-hmm.
And I personally think, because NFTs are just so early right now, it is the most riskiest. Because again, you can't just sell out when you want to sell out. It's like, no, you have to list, and then hopefully somebody buys it, and it's driven by like, okay, well, like what's the floor price? What's the common selling thing for your NFT? But at the same time, you could be promised the whole world, put your money in, and then boom, you never see the value of putting your money in. Whereas
Yeah.
crypto, you put it in, you could take it out at any point. Like, oh, it
Yep.
dipped a little bit. Like I could pull it out whenever I want to. I don't have to deal with. It's still community based, but you could deal less with the community. You could be like more solo. It's a bit more stable than NFTs. Crypto isn't fully stable, as we can see in the markets right now. But it's there's more success, there's more of a track record of more successful projects in crypto rather than NFTs, because sadly, again, majority of the project NFTs are scams. But I do want to continue down this. Before I continue down this, I do want to say this. The reason why people are so crazy about NFTs and they're getting like their research and stuff done now is because it's going to play such a huge part in the world moving forward. It's really like way ahead of its time right now, because like non-fungible tokens, like it's going to be a huge part of our life, from like tickets to real estate. You can imagine like just having true ownership of objects, not necessarily objects that are just like 30,000 plus, but just like even like $20-30 objects, just saying, hey, you're the true ownership of this. And then the whole, I could go down a rabbit hole with that. But
Yeah.
I do want to just say this, like, okay, this is a great transition for crypto, so I'm gonna come back to that. And it's just saying, yeah, fiat money, right? Fiat money, it's the least volatile right now, compared to crypto and NFTs, because that place it's still establishing itself. So I would rate the risk from highest to low. NFTs are the riskiest, but again, where there's high risk, there's high reward. Like, and I think that with NFTs, you can get a really high reward, but there's really high risk in the space, and you got to know how to navigate it. It's turned people into millionaires over the pandemic. Crypto is the second most riskiest, and I'll say fiat money is the least riskiest.
Really?
When you mean fiat, not the car, right? I just want to make sure.
Oh yeah,
that's what I thought. The car.
I'm hearing you correctly. 'Cause I'm like, that's a random like car brand to bring up. Like, so you're not talking about fiat, the vehicle.
No, fiat money just being more like your hard money that you carry around. But I'll explain, and I know I can just explain that, but I'm explaining why crypto and NFTs are important and why we should get rid of fiat money. That's gonna be like a great segue.
I didn't even know fiat money existed, other than a fiat that I can sit in and back up and take off and drive.
Right.
I know it got me at first when I first heard it. But
wait, someone said NFTs sound like real estate plus stocks. Wait, I guess real estate has sex with stocks, and now they're friends with benefit. Am I reading that right?
Wait.
No, you're not reading it right. But is it a combination of real estate, stocks, and then you have the benefits?
That's what I just said.
You did not say that.
Yeah, it's a combination of real estate, stocks, and having the benefits. I mean, I wouldn't put it there first of mine. I really wouldn't compare it to that. I would literally just compare it literally being like a stakeholder in a business, like how shareholders make decisions on how a business are going to operate. That's what NFT holders are. Like, they're basically shareholders of their specific community, and they're saying how things are going to operate.
You know,
okay.
When I first heard that, and I know you're going to switch over to crypto, the first thing I was thinking about when I gave you the toe example was it's basically a popularity contest, and whoever's more popular, that's who's going to get the attention. In a nutshell.
Yeah.
If I wear some jeans from Kmart, and Kmart, you don't even know what Kmart is, sorry. If I wear some jeans from Walmart versus, I don't know what celebrities out right now, some celebrity wearing the same jeans, they're going to get more attention from Walmart than me wearing them. And it's basically who's more popular that's going to get the most attention of those same jeans. Yeah, it's a popularity contest.
Yeah, exactly. I would even say, like, that's why I keep comparing it to a business. Is like, there's social media platforms, but Instagram is the most popular. Like, it's about marketing. Who's grabbing most of the market? So I think, that's a great way to look at it.
Sorry, Kendra, we had to burst your bubble on that one. All right, crypto.
Wait, she said.
What?
Wait, I have another question. Wait, she said, I guess I'm trying to figure out how it's different than stocks. I guess how NFTs are different than stocks. But I guess you're going to go into that. But let me ask you, what about Chromie Squiggle by Snowfro? You ever heard of that?
Chromie Squiggle.
Yeah, I'm not making this up, Jeremiah. It's Chromie
I was
Squiggle
about to say
by
you making that
Snowfro.
up.
No, I'm
Yeah.
reading it right now on the OpenSea thing. Chromie Squiggle Snowfro.
Yeah.
If it ain't blue plate or blue collar or blue something, it's probably fake.
Yeah.
No, it's got a.
I'm not too familiar with it, but another thing you want to check for on OpenSea, make sure it has a blue check mark to make sure they're verified.
Yep.
Are they
This
verified?
one does have one.
Okay, cool.
Yeah, it's number 20. It's number 25.
Okay, yeah.
Yeah, it's 25th rank.
Yeah, I don't know that by heart, and that doesn't mean just because it has a blue check mark, that doesn't mean it's completely safe. Like, scams can have blue check marks. It's just a step in the research process. Yeah, you just got to do your due diligence. Go check out the website. Go check if their Twitter has over, I would say, 30,000 followers. That's a good indicator.
Wow.
Like, these are serious metrics you do when looking at NFTs, because you want to make sure that, one, when you have an NFT collection, there's scarcity. There's only so many that are out there. So there's people that want that NFT, but they can't have it because it's already sold out. So you want to make sure there's there's hype behind that Twitter. People want this NFT, and that's going to help drive up the price. But big thing with that too is that you don't just look at the followers. It's literally a whole thing you have to do in this process. Like, you want to look at the engagement with their tweets. Did they just buy their followers? That happens a lot with scam projects. They buy 50,000 followers, but they post stuff and they only get 3 likes. So there's a whole process you gotta look into.
Wow.
Yeah. So I can really spend the rest of the episode.
I like the name.
How to find a good NFT project. But I want to answer your question though, because it was a really good one. Does the stock market drive I guess like the price of crypto and NFTs? As of right now, like with a lot of the stuff you can see happening, sadly it's looking like that's the case, because the stocks are down, right? One of the real reasons why the NFT market is down, I mean, there's other reasons pushing at it as well, is because the Feds increase the interest rates. Basically, they want people to be holding more and spending less. And if you want to hold more, you want to make sure your money actually holds value. So they actually want you to encourage you to hold, I think, implicitly hold more of fiat money. So basically, when you do that, a lot of people take their money out of stocks, because by increasing interest rates, a pattern that you see is that, I'm not a financial advisor, so let's say this, but a common pattern that you see is that you will have more value holding your money than actually having it into an asset like on the stock market. In any case, that's why the stock market often goes down when they increase interest rates. And the same thing kind of implies with crypto. I was like, okay, I should be, instead of like spending more on assets, I should be holding more. A lot more people are liquidating their assets in crypto. And once that kind of cycle starts, it just keeps going, like, oh, like it's going down. Like, people are liquidating. Let me liquidate too. And then I'm gonna dive into why it's so down now. There's a lot of different reasons why that's happening.
Please.
Yeah, because I'm losing a lot of money, or excuse me, I've lost a lot of money in crypto. And I have billions of tokens in crypto because I bought some that were dirt cheap, which had a bright future. And I understand I bought them within a year, and I can't expect to make all my money back in a year. But, where is it going to go with crypto? And should people really be moving away from stocks and buying crypto right now because it's down?
Yeah, that's a really good question. And I want to start off with like a bit of a history lesson before I get to that.
Yeah. What is crypto? I mean, hey, I got this imaginary funny money. We're going to call it Bitcoin.
Yeah. Wait, doesn't crypto come from like a certain strain of weed? Cripweed.
No.
I know. But yeah, I just want to start off with like kind of like money period, like how we use money in general, like over
Okay.
time, and kind of showing how it's looking like we're going to go into crypto. So if you look over time, like through history books, like money has been used in different stances. Like at one type of time, like we use bartering. We would trade like, work for, different goods. Hey, I'll chop down this tree if you give me like, I don't know, 5 fishes, like, stuff more on that terms. And then we started using more things of like measure to count money. So in this case, at one point at a time, we use shells and we use stones to count money. And they were like, okay, well, let's actually kind of use money for something a little bit more scarce. And eventually, if you go a little bit speeding down in the history books of money, that's how we got to more valuable scarce goods like, like silver, diamond, gold, right? And if you look over history, it's a really interesting thing from the most recent reserved currency empires, the Dutch, the British, and then now the U.S. Over time, you can see like there's the same cycle that's happening where, and I won't go into the Dutch and the British that much, but
I love the Dutch.
I'll talk about the U.S. Whereas what's a common thing that's happening is when the U.S. became the world's reserve currency, we basically told people we wanted to establish the dominance of our money. So we told Americans all across the world that had gold, hey, you can't own gold, turn your gold into the banks, and we'll pay you cash for what that gold is worth, right? So then that's how they're getting more people, more fiat money in their hands instead of this hard asset of gold.
Yeah.
But what happened was, if you Google like the gold standard, what the U.S. government pretty much did is after everybody turned in their gold, they basically indicted that gold was like twice as much worth more than what people traded it in for, which basically boosted up the so-called value of money because like the money was backed by gold. And they basically inflated the money just by saying, hey, this gold, we're going to say this gold is worth more. It was just complete speculation. And a lot they put out, hey, this gold is worth more. And then what happens is that since we're getting these hard assets out of circulation, there's more money being printed. There's more and more money being printed. And then soon enough in history, what happened was we ran out of gold. The money was linked to gold, but we ran out of gold and the money got low and we just kept printing more money. So the
value of the money went down. Yeah.
Then there was actual gold in the reserve. At one point, the reserve pretty much had like no gold in it, but we just kept printing and printing more money. And this is what we're seeing nowadays and across different previous reserve currency powers is that basically the government instance, a centralized instance, they're basically determining the value of these hard assets, and it's a cycle of them over time printing more fiat currency than they actually have as like hard assets in the bank. Like it's complete speculation. There's no type of like true rules and guidance that's guiding them. And it makes things bad. It devalues currencies, and then that's how we get the cycle of reserve currencies moving into power. And it looks like right now China is becoming like the next reserve currency that's going into power.
You mean the yen?
Yeah, the yen. Because the reserve currency, what's backed up a lot with that is from a lot of different things, from the technological advancements that a country has, the education, the power of the community. It's a lot of different things that country has that makes it like a first world, country that makes it a reserve currency. They're just kind of killing it at everything. We're at the top right now. Before us, it was like the British, the Dutch were before the British with the boats. And in China, they're kind of just whipping us with technology right now. So they're going into the lead. But the reason why crypto is coming to play is because crypto is on the blockchain. And then If you don't know what the blockchain is basically a record of receipts. And what we can do with crypto is we can create a set amount of coins that we're going to use for, payments and circulation. So what this means, two things. One, we're on the blockchain, which is a record of receipts. It's a public record of receipts. One, this kind of decentralizes how money is used around the world. Instead of centralized, where people are saying, hey, give me your hard assets, and then we're going to give you this fiat money, and then we often follow the pattern of printing more money than we actually have backed by hard assets. Crypto is this concept of, hey, there's a limited amount. This is public information, public information of receipts of who owns what. And you can never create more. Like once crypto is burnt, or once it's dispersed or bought or mined, you might have heard like crypto mining. Once it's mined from the blockchain, you have that, and no more can get created. So I think like at some point, probably in like 10 to 20 years, you cannot mine any more Bitcoin. Like the Bitcoin that everybody's gonna have is going to be already dispersed. So what this is it's a set scarce amount. Money has to be scarce, for one. Well, we learned over history that, hey, we need to create some type of scarcity in money. And then two, there's a public record of receipts with crypto. We don't have to worry about, like centralized forces. Just completely, speculating how money is going to be worth, printing more and more money. But yeah, I think that's the big concept of crypto is the decentralization. It really just empowers, it puts the power into the people rather than centralized authorities. And it's a really tricky space because, because right now the value is more so, for lack of a better word, it's determined by like an algorithm rather than actual, hard backed assets. And I saw you make a face when I say algorithm.
Yeah.
and basically when I mean algorithm is basically the blockchain. Like crypto right now, in some cases, there's a linkage between the two, where certain banks, you could take out loans and they're using the collateral for those loans as actual hard assets. They'll give you like a crypto loan, but it's backed by hard assets. Some people think like you need the two to, yeah, what's up?
What's a hard asset?
So yeah, a hard asset is like something in the real world, like gold, silver.
Okay.
It's not just, for example, like a JPEG on the internet. That's not a hard asset. That's just something.
Yeah, bank just be like, yeah, get out of here.
Yeah,
exactly.
I want to do it like that, but yeah, that's kind of the whole importance of crypto, is that the big narrative is the centralization. It really puts the power of economies in the future in like individuals' hands, instead of having it in like authorities, central authorities. But yeah, I know we only got like a bit of time, but I do want to talk about like why the market is crashing right now. So one, now,
I lost 1,000.
Yeah.
Actually, before you get into that,
Yeah.
what are some cryptos that people can get, and what is the get into, and what is the best way to say, you know what, I want to buy some cryptocurrency before you get into the market. I want to buy some cryptocurrency, but I don't know which one to buy.
Don't you say Dogecoin.
There's tons of them out there. Yeah, we both bought Dogecoin. There's tons of them out there. His dad's fault. No, I'm just kidding. There's tons of them out there, but how do I know which one to buy? Because it's almost based on like a celebrity pushing it, Dogecoin, Elon Musk, and a certain prediction that may occur, SNL, that everybody's buying it, but then you heard there are whales who are out there selling it to drive the price down. And so for someone who doesn't know, and looking at Coinbase and looking at all these other platforms that want to buy some crypto, and all they see is, wow, I can spend $1 and get 10,000 coins or 10,000 tokens. Is that a good one? or I can spend $1 and get 100,000 coins, and it's a fairly new crypto that's going to be, 10 years from now, I'm going to be a millionaire.
Yeah, this is another really good question. I just want to say,
I'm trying to see how I get my money back. No,
I don't know about now. Yeah, I just want to say more coins, like cheaper coins, does not always mean that's a good crypto. I want to put that out there first, because some people may think, oh, I'd rather get like 10,000 coins of this than like a percentage of like, say, like 0.0005 of like Bitcoin. And you almost have to approach crypto the same way as you approach NFTs, in the sense that you have to look at like what's the reason behind why this coin was created. Like, what is this coin going to be used for? Like, what's the trading potential on this coin? So it's things like Dogecoin. Those are in the category of like meme coins. Dogecoin, Shiba Inu, Elon coin.
You're killing me. You're killing me.
No, I gotta keep it real. I gotta keep it real.
Oh God, I own all those.
So yeah,
wait, which one? I know you said Dogecoin. Did you say ETH?
Shiba Inu. There's some other
the dog
there.
Yeah, the dog. Yeah, they're memes. They're meme coins.
Shiba.
Yeah. So that's a really interesting case, because it really did get pumped a lot by Elon. And that's the thing about crypto that people really need to figure out, is that whales can really manipulate what's going on, and that's why crypto's crashing right now. Because
what is a whale? Sorry, we use a whale twice. I know what it is. You know what it is, right? I don't know if you know this, but for those that don't know, what is a whale?
Yeah, and what is, Keith? What does the utility mean? Do you know what that means?
The utility.
Someone wrote the utility. Yeah, I don't know. Maybe he means like the utility of that you use for this crypto, but I don't know. Go ahead. Maybe he'll explain it.
Okay. But yeah, explain what whales is.
What a whale.
Yeah. Sorry about that.
Whales are basically just they're big investors. I like personally think of these people. They're like crypto millionaires, or just even real life millionaires, who are just dropping a big bag into crypto. So often,
that's him.
Hey, if you're a whale, you doing good right now. But
he's an orca.
Orca whale. But yeah, whales, they often take up about like 10% or 15% of the holdings on a project. Sometimes like it could be a little bit lower than that, but they take up the majority compared to like an average holder. So these people are very, very high spenders. And what is really kind of good and bad about these people is that if they just throw again like $10 million in the Shiba Inu, I think Shiba Inu's market cap is pretty high, so they probably have to do a little bit more. Say like 500 million in the Shiba Inu, it's gonna shoot up. It's people that do this for real, that will throw that much money in
intentionally.
Yeah, and
wow.
and it'll shoot that price up.
And then they sell it.
And
God.
No, yeah, I mean, and at any point when these whales do cash out, that's why it's good to look at the tokenomics. That's a whole nother conversation when you're going into crypto. It's like, how much can people like take out at a time? Like, what are the benefits to holding it? When people take out, do I get a percentage of what they take out? Or when coins are burnt, do I get a percentage of the coins that are burnt? Like, there's different tokenomics. So if you want to do homework on crypto and investing, I would highly suggest you look into the tokenomics on your free time, because that's a whole nother conversation. Just like looking at good NFT projects.
Well, we got a question here. I guess because he explained utility, he said you should look at the utility of the cryptocurrency, and he meant what will it be used for? I guess. And then he said, for example, like cross-border payments. Any of that make sense?
I mean, yeah, cross-border payment is a case. I don't think it's a strong case, but yeah, like it's really like what that coin is going to be used for. And I think a good place to start, it's kind of boring, but sometimes this is what you need to do to really understand what a crypto is doing, is looking at the white papers. So on all these cryptocurrency websites, they have something called a white paper, and it's basically just saying like it's their statement of purpose. It's basically telling you the purpose of this cryptocurrency. And if you're going to seriously invest like any large sum amount of money, I think even over $500 into a cryptocurrency, I would definitely take the time to read the white paper, to see what's going on, to see like what's actually happening. Now, some common cases that you can probably skip. I'm not a financial advisor. I do want to state that again. I think a common one that people are using is like Bitcoin and Ethereum. Like those are more established as the king and queens of crypto, whereas a lot of people have reviewed the white paper. A lot of people believe in it. Bitcoin has had.
How the hell you spell that?
Spell what?
Ethereum?
Ethereum or Ethereum.
Ethereum.
Yeah, Ethereum. ETHERUM. Ethereum.
Got it. Yep, I got that.
So yeah, okay, all right, you down too? But yeah, Bitcoin, Ethereum are like usually like the kings and queens of crypto, because a lot of people will compare Bitcoin because it was first to market and it's also really secure. It's the gold of crypto. A lot of people will say that, like, you can't go wrong with Bitcoin because it's the gold of crypto. But Ethereum right now has, I think, one of the highest trading volumes in crypto, because it's the main currency behind the NFT space, which is a whole other sector of this whole realm where people are spilling. Like it's a $1 billion market cap, like NFTs alone. So there's a lot of money being traded on Ethereum. And you have like other ones in there where you got like Polkadot, Solana, but typically, you know, people who have no experience, if they just want to throw money into crypto, I'm not an advisor, but they typically put it in Bitcoin or Ethereum, just because of the long-term gains potentials of it. And in explaining why there are so many cryptocurrencies, like why can't there be one, right? Well, one, these cryptocurrencies, they run on their own blockchain. So there are multiple blockchains. The Bitcoin has its own blockchain. Ethereum has its own blockchain. Solana has its own blockchain. I mean, some of the coins do run on like layers of either like Ethereum or Solana. But typically these coins, these like mainstream, like king and queen coins, they have their own blockchain. And with their own blockchain, they have different setups and configurations. So with Ethereum, the big thing behind like why that's being used as more the currency that we're trading and using like money in the real world is because it's fast. When you do transactions and log receipts to the blockchain, it does it way extremely faster. I think, I'm not gonna say the number because I don't know off the top of my head. It's extremely faster compared to Bitcoin. That's why we don't trade Bitcoin, for example, for like NFTs, because it's too slow to be handling those type of transactions. But man, I can go into gas fees, but I do want to talk about this, like, because I think this is really important on like why is the crypto market crashing right now really hard?
Yes.
Yeah. So one is the stock market. The interest rates, again, with people wanting to hold more money, there's a lot of fear and people like actually having assets invested into any market. So that's one of the reasons why things are being driven down. A lot of the times too, why crypto can be driven down, it's through FUD. And FUD basically is a crypto term, and it basically stands for fear. Dang, I forgot what FUD meant. But
fear of double D.
Please don't let him make up what FUD means.
Wait, I got my card right here actually. So this is
wait, fear of double D.
My little crypto term card.
There
like
you go.
Terms you need to know.
Oh wait, he said it. Oh, Keith is on it.
Doubt.
Yeah, fear, uncertainty, and doubt. Yeah, that's basically what FUD means. So that's what a lot of people have right now. From the stock market crashing, when they introduce new regulations, like, for example, China at one time saying they're going to ban crypto. There's FUD in the market. People are like, I don't believe in crypto. They're liquidating. Liquidating means they're taking out their money. Well, most recently, I think we had probably the worst catastrophic events in crypto history a couple of days ago. And crypto will probably be for like the
Oh gosh.
next six or so months, until probably we see the stock market perform a little bit better. Maybe we could see a bounce. But a big thing happened with the stable coin. And if you don't know what a stable coin is, a stable coin is basically a cryptocurrency that has it just maintains its value. So there's a stable coin. It was called Terra. 1 Terra always stayed at 1 Terra. Like it was a dollar. And the reason there were stable coins was because cryptocurrency is very volatile. So in any time that you want to take your money out, put it on the bench, instead of having it active in the market, you put it into a stable coin. So like they tell you at any point, like always take profits when you can. In crypto, that's a big trading term. Always take some sort of profits if you can. Like whatever you invested, take that back out, and then dollar cost average, just invest it back in. But a lot of people, what they do is when they take it out the market, they sit it on the bench in one of these stable coins. And what happened was that this stable coin called Terra, you could Google it, Terra USD, it lost 90% of its value in 24 hours.
Ooh.
So
Good God.
yeah, a stable coin that's supposed to always be a dollar. Sometimes it gets like to $1.01. Sometimes it stays at 99 cents. It's designed in a way that it's supposed to stay at that fixed price because people invest there and they hold a good chunk of their life savings there because they're relying on it to be, they're relying on it to be stable, it's safe. And it's sad because you got people who had like I think a YouTuber, KSI, he had like $2 million worth on the Terra stablecoin, and it's down 90%. That $2 million is like
people
completely worthless right now.
Whoever is listening to this, just like with stocks, with gambling, with playing the Florida Lotto.
Yeah, but
wait, we got a question.
Your money, we're gonna get to the question. But if you invest your money, please know from all of this: stocks, NFTs, crypto, Florida Lotto, strippers in Tampa. If you invest, whatever money you dish out, expect not to get it back. That's how I sleep well at night. I do not expect to get it back. You know what? If I get back 100 times fold, hey, I'm living good. Do not invest your life savings. Don't do that. Exactly. Only invest what you can lose. So now we do have a question in there, but hold on, Jonathan, about Zyphar. Have you heard of Zyphar and what is it?
Zyphar? No.
XIFRA.
Is that pain meds?
I've never heard of
it. Is it pain meds? Zycam?
I'm not too familiar. Yeah, my chat is like frozen. I can't.
Yeah, I barely caught it.
XIFRA.
What do you mean by that? Yeah, or where did you hear it? What platform did you hear it on? Is it a crypto? Is it an NFT? Maybe that can kind of help us out. All right, sorry, Jonathan. Go ahead.
No, you're good. But yeah, definitely never invest money that you're not willing to lose. But this is the complicated and like the emotional part behind it. Was stable coins was more so introduced as this way of like, hey, if you want to not invest money you don't want to lose, put it on a stable coin instead of putting it into one of these more, like actively volatile coins. Because one of the benefits of having on a stable coin versus cashing out on it, one is tax benefits in certain countries. If you hold your cryptocurrency in your wallet or exchange for over a year, you can escape taxes. So that stable coin can be used as like a little sitter area while you're just letting the timer run out. But also, but when you want to do big investments in crypto, if you don't know, like a lot of these exchanges and wallets, they have limits to how much you can like pull out a day. Like I think for Coinbase, I don't know, like the max is what I don't even think you could put like $10,000 in a day in the certain cryptocurrencies on Coinbase. But like there's certain limits that you reach, and when you want to do these big investments, a lot of big holders, what they do is they set their money on the bench in those stable coins, and it's hot, like it's ready to be used at any moment's notice, and they could just swap it for whatever coin they want to actively put it into. So that's one of the reasons why somebody would keep it on a stable coin instead of cashing it out for fiat money. And it really sucks because now it's driving a narrative behind, hey, maybe we do need regulation behind at least stable coins. Because the way this coin specifically was, I'm not gonna spend too much detail because this is very technical. It was pretty complex the way they pegged that coin to stay at $1. And what happened was whales manipulated it. They think it was a targeted attack that the founder of the coin actually let happen. Withdrawals basically from a coin that it is pegged against from like over 10 million to 64 million being the following next one. It couldn't balance itself right. So the way stable coins work, it's like what comes in or what goes out must come in. So when anybody basically deposits a coin, they burn a token to keep the price the same. There's like an out that's going on to keep that price stable. But when it's backed by something that's like not too reliable, like this case, another coin where people were cashing out big, it got unpegged in the algorithm and it hit an all-time low.
Damn algorithm.
Yeah, I mean, yeah, it's the way they did it. There's certain stable coins that have made it, like USDT, and there's another one that it's kept its value at $1, but specifically this one, Terra, it dropped and lost its peg just because of the way it's set up. And that's why it's really important to go through those white papers and understand like why you should even invest in this coin, because you often do want to go more with the more popular, more reliable choice that the majority of people are using. Because Terra, sadly, I mean, a lot of people did use Terra, but it wasn't the number one stable coin out there. It's probably like, number 3. But sadly, a lot of people did lose their life savings in like hours yesterday. So it's a very sad.
Well, why is it white papers and not black papers or Asian papers or?
That's just a terminology.
Oh, okay.
Yeah, I don't know. Yeah,
I mean, we have white papers in the medical field. It's just the company's version of publicizing their research into what they are trying to get people to either understand, purchase, contribute to. It's basically like a research paper, but they call them white papers. There's a certain format that has to be followed and things like that. So no, it's not called black papers.
Damn.
yeah.
Well,
Oh, go ahead. Sorry.
This extra thing, what Karen the Waxy was mentioning, it looks like it is some sort of exchange, which you already know, but looks like it might be I might be reading wrong, but it looks like a Ponzi scheme. Extra lifestyle, it says the Ponzi scheme, but I think also too it has to do with cannabis and crypto. So it might be one of those.
Okay. Yeah, I'm not too familiar.
This is what I'm reading.
Karen, run. Don't do it. Don't do it. Pull your money out.
Hey, it's a tricky space. But I do want to say there's one important thing. I can't talk about all this stuff without mentioning this, because this even happened to me. I'm talking from personal pain of crypto wallets. A lot of people need to understand this. First off, one of the ways you buy crypto, you can either buy it on an exchange or a crypto wallet.
Trust wallet, yes.
So my Trust wallet, I lost over $600 in Trust wallet. I'm gonna explain why I lost $600. But so yeah, exchange or wallet. Typically, I'm telling you, any crypto gearhead, expert, they're gonna tell you to have your own wallet. And I'm gonna go dive deeper into that, like specifically a hard wallet. Because if you have your money on exchange, yes, these things are like pretty easy to use, like Coinbase and whatnot. But it's been recently released out that, hey, if any of these Coinbase coin exchange companies go into bankruptcy, they basically own the rights to your private keys. And in layman's terms, you don't own your crypto. truly when you're on exchanges. If they go into bankruptcy,
Wow.
they can basically take your crypto away from you to help save them, pretty much.
Whoa.
So that's
Wow.
yeah. That it's a big thing that's being talked about right now. About, hey, you guys probably shouldn't even really be messing with exchanges like that because you don't even truly own that crypto. But when you do own your own crypto wallet, there's a unique thing that happens. One, when you create it, it's protected by something called a seed phrase. You want to protect that at all costs. Typically, you don't even want to store that digitally because if anybody gets access to that seed phrase,
Yeah.
yeah,
Your dad told me about that. Yeah.
yep,
Yeah.
they can clear your whole wallet. They can clear it out completely. Same thing with your private keys. A lot of people will probably never come across private keys, but this is a really good. I have to say this. I know it's going over, but this is really, really important. Don't connect your wallet to just anything. And I think so many newcomers fall short to,
Yeah.
Yeah.
and they think, oh, connect my wallet. Let me connect. Or you type like OpenSea. There's like versions of OpenSea. If you just type it wrong on one letter, it's gonna look like the same website, and you're gonna connect your wallet. But the bad thing is about this is when you connect your wallet to these malicious websites, you're basically signing transactions for them to have access to your wallet, and pretty much they can move everything out your wallet within seconds. Sometimes it's like bots queued up, ready. As soon as you sign a transaction on, for example, an exchange, or exchanges are very dangerous. I would definitely stick to top renowned exchanges. Look at exchanges that have been audited. I know I'm throwing a lot of terms at y'all, but audit exchanges. Y'all want to look into that because you don't want to just go on random exchanges and connect your wallets because it could be malicious. You don't know what they're doing with your private keys, and they could just move stuff out your wallet. So that's one thing. Don't connect to everything. So Bored Ape Yacht Club, we were just talking about them. They got hacked recently where it's really sad. Like, it's a lot of hacks happening in crypto. Like, we just had
Yeah.
one, like, over 500,000 with Axie Infinity. Was a play-to-earn game. They said South Korean hackers did it. There's million-dollar hacks. I think compared to 2021, just the first quarter of 2022, it has outproceeded last year in crypto hacks. Just the first quarter alone, I think with $1 billion worth of crypto already being stolen. And a large reason for this is people are connecting their wallets to bad things. So what happened with Bored Ape was their Instagram got hacked, in their Discord, and they were saying to their members, hey, connect your wallet. And I think you got like this free airdrop. Airdrops when they put random things in your wallet that can hold actual value to you, typically NFTs. And they connected their wallets, and then boom, they went back in, their wallet's cleared. Their NFTs, crypto, is gone. So
Wow.
if I had to say anything, I don't think this is talked about enough. Don't connect your wallet to everything. And then number two, with not connecting your wallet to everything, there's two types of crypto wallets. So you have things like Trust Wallet, MetaMask, Coinbase Wallet. And there's a lot of them out there. Those are hot wallets. Basically, hot wallets are wallets that are connected to the internet. Those are also pretty dangerous because I'm not sure how it happened to me. I had Trust Wallet. I had an NFT in there that was worth like $500, and I had like $100 worth of Ethereum in there. There was like iOS hacks going out where I didn't see it at the time. Someone from China tried to log into my Apple ID account, and it proposed to me on my phone, hey, you want to change your password if this is happening? And I went in and changed my password. And basically, behind the scenes with iCloud and stuff, they got the private keys to that Trust Wallet, and they cleared my Trust Wallet and sold my NFTs.
Yeah.
So if you're storing some serious value, and I will honestly say, like, anything, like, you would, I think in general, if people just lost $20, they'll probably hate it. If you don't want to dread a hacker stealing your money, look into hard wallets. They're called ledgers, and basically these are wallets where you can put your crypto off the internet. It's like stored in like a physical device that you keep with you, kind of like a literal key that you keep with you. You can put it in the safe at your house, a fireproof safe, anything like that. A hardware wallet is going to do you way better than a hot wallet because one, to sign transactions, a lot of the ways that's set up is just like two-factor authentication, where it's like you need that hardware wallet plugged into the computer that's signing the transaction. That's one of the benefits of hardware wallets, and it's just way more secure. There's way less hacks with hardware wallets than there are hot wallets.
Okay. Well,
Hardware
this
wallets are
pervert said.
so
This
okay.
pervert said hot wallets are okay. You just got to be careful, but keep most of your stuff on a cold storage wallet. Is that what you were gonna say?
Yeah, cold storage wallet. Yeah, hot wallets are cool. Like use them from time to time. But if you're buying that NFT that's worth like $500,000, put it on a cold storage wallet. Like I personally, for me, anything over 1,000, I'm putting it on a cold storage wallet. Like I'm not.
Well, if
I'm
I'm not
gonna,
spending Monopoly money, I'm not spending $500,000 on any. No,
it's
Are
not
cold store
monopoly money fully because like I told you, like the way society is transforming, the centralization, and we're trying to like de-rule centralized powers. It's going to become the real thing. So it's not going to be like play money forever. We're just really early right now. Really early.
are cold store wallets free? Like all these wallets, I know a trust wallet I think is free.
Yeah,
But are these cold wallets free?
no, cold wallets are not free. You got to buy them. They're probably like, I think the best ones are probably like $30 to $40. You can get on Amazon.
Oh my God.
Yeah, you want to protect you want that. If you investing seriously, because like listen to what I told you. Like one, a lot of people say, oh, put your money, if you're gonna go in big, put it on exchanges. But I just told you, if that exchange ever goes into bankruptcy,
yeah, they're gonna take your money.
they're gonna take your money. So why would you put a lot of money onto an exchange? Because you could potentially risk losing it. And then why would you keep it in a hot wallet? Because all you gotta do, literally, is it could be on complete accident, and that's the thing with hot wallets. You could just connect to the wrong thing or click the wrong link. Your stuff is gone in a snap. So you just want to double protect yourself. Like big investments, cold storage, all the way. And I don't think this stuff is talked about enough. I think a lot of people just they get, a lot of people are just on exchanges. They don't have wallets in general. They buy their crypto on exchanges and they just see where it's gonna go. And then a lot of people, the second go to is MetaMask. They just go on there and they connect their wallet to random things. They go check back, boom, it's empty. So you just gotta be cautious with wallets. Nothing is terribly wrong with them, but just be super cautious.
Okay. Hot wallets, hot pockets. Got it.
Wow.
No trust wallet.
I mean, you can use trust wallet.
Yeah, trust wallet is good. Just be careful what you're doing on there. So we are well past where we need to be as far as the top of the hour. I think we've definitely scratched the surface, dug in a little deep. How are you next week with coming back on and finished up the conversation? Because I think there's still a lot of unanswered questions. I don't want to dive back into NFTs. I think crypto is more reasonable for certain people, even if they want to get into it, more affordable. I don't know how much stocks you want to get into that, but I think crypto is more affordable to those that are watching rather than trying to invest in an expensive NFT. And just giving more tips on how to purchase cryptocurrency and which ones to definitely stay away from.
Yeah, that's what. Yeah. Definitely need that.
Yeah, no, most definitely. Yeah, it can come back next week. Were there a lot of questions? I can't. My chat is frozen, so I can't. Really
there weren't a lot of questions, but I think diving into where you are, I'm trying to ask the questions that the viewers probably are thinking about that don't want to ask, and definitely asking some of the questions I asked your dad early on with crypto, as far as which one to buy, what does this mean? Okay, I bought this many, now what? There's a whole nother conversation we can get into with converting into Binance, and from your account to Binance to, we can go.
Yeah.
That right there is confusing to me. So, I guess some of the expectations of the novice who wants to get into buying like, in other words, I'm a novice, I want to get crypto, I just can't go to cryptocurrency.com and say I want to buy this. There's a whole lot of steps that happen with setting up your wallet. I think you did a great job on kind of leading into that with setting up some of the wallets and how you can go in and purchase different cryptos based on what coin marketplace, that website, and looking at where things are going, where to buy the value at, and the conversion rate, because there is a conversion rate
Oh yeah, we should talk about that. Damn.
with a fee. So
Yep,
depending on where you're buying your crypto, there is an associated administrative fee. So you maybe think you're getting $30, but you're really not getting $30 worth of crypto. So,
Oh, yeah. Yeah.
but yeah, we can kind of uncover that part 2 next week, and get right into it, because I think there's still a lot to uncover, because crypto is so diverse, and it's a huge topic.
Yeah.
That's very foreign, and like you said, it's more advanced, and we're further along with crypto than NFTs, and it is going to be the future. People who are going to be listening to this, do not get it twisted. Cryptocurrency will be the future of currency, definitely in the United States, probably in the near future, and when I say near future, probably within the next 5 years.
I honestly can't wait. I can't wait to go to a strip club and be like, hold on, girl, let me give you this Ethereum. Okay.
Exactly.
Hey.
How much is it? 200? Got it.
Yeah.
Come on.
Hold on. Take your device out. Okay. What's your thing? All right. Cool.
Yeah.
All right.
Yeah.
Cool. All right. That's 3 dances. Got it. Send. Did
All
you
right.
get it yet? Got it. Okay.
200.
Cool. All right. Man.
200 Ethereum and 10 Dogecoin for lap dance. All right. Come on.
Hey,
That'd be great.
I wouldn't be surprised if starting this year, like, I'm serious, because you got big brands, Gucci, the fashion brand, they just announced in select stores you could start paying for stuff and check it out in cryptocurrency. So it's getting rolled out. It's coming, and it's bigger.
I mean,
it's way bigger in other countries. I'm telling you, crypto is really a global thing. That's the really big part. Like El Salvador just bought like $15 million of Bitcoin on the dip. Yeah. So
I'll say this
it's
though,
an international thing. Like I think we're behind personally, like as a whole in the US with the understanding of crypto, because it seems like it's some really knowledgeable people like in these other countries that understand like why we need crypto.
wait, someone did have a question. What about the fashion?
I'm giving up on
Mine did too for a second.
Yeah.
It said, what about the fashion stores? Well, did you just answer that?
The fashion for crypto payments, a lot of fashion stores are starting to use it. Absolutely.
That's cool.
But
I don't one thing.
What's up?
No, I was gonna say when a prostitute or stripper comes at me and demands Bitcoin over money, she's ahead of the game in the U.S.
Hey,
she's ahead of the game.
Hey, she know her money.
Yeah, exactly. And if she says, "Hold on, let me talk to my financial advisor about that conversion rate," I'm like, "Okay, I'm out."
yeah. I can't have a good time.
Too much for me.
Yeah.
But I do want to stress, like, crypto is been along for quite a while. Like, it's been here since 2017. I would say, like, on a mainstream level, like some mainstream stuff has been going on for a minute. So I want to say, even though that's the case, we're still very, very early. Even the same thing with NFTs. Both of these are multi-billion-dollar, technologies that are developing, and that's why people they're active in it. They're trying to learn about it because. Last thing, because I'm gonna go on a tangent if I keep talking. I was just talking with a crypto co-founder. He's building a startup on the Polygon blockchain, and something he told me was that, hey, you look into like why Jeff Bezos left his comfortable job. I think he worked in like Wall Street or something. Why he left his comfortable job in Wall Street was he checked percentages one day in a newspaper, and he saw that, I don't know, it was like a 200% increase in like the amount of people who were using and engaging with the internet, and the possibilities of the capital of what the internet could become, and that eventually became Amazon. They're doing the same thing today with crypto and NFTs, because these percentages compared to that web boom, just not even that long ago, these percentages triple the percentages of what was projected in newspapers like back then for web. So a lot of people they're really excited, and despite these dips and everything, they're really seeing it through, because 10 years time, it's gonna change a lot of people's lives. Just having like a head start in this space. So we're very early, but it's gonna play a huge part in our future.
Wow. Well,
A lot of dips.
I'm excited. Exactly. We don't know if it's like strawberry chocolate dip, but I'm very excited that you came on my nephew, talk about money, finance, how do you make it through other means. You don't want to get into, hey, I need to start up this business, start up that business. I want to invest in a different way from stocks. Cryptocurrency. We will be back though next week for part
stock market
2. If we have time to talk about stock market,
let's touch on the stock market. I've lost 10,000
right now. The stock market is in a terrible place, even though it does drive crypto and NFTs. Terrible place, but I want to dive back more into cryptocurrency. Which ones are some of the major platforms? How to pick your wallets, where to get started. That thing, you gave us a lot of info for the viewers to digest before next week. So if you're going to be looking at this between now and next Thursday, please go out there, get your pens, pads ready, get your wallets, trust wallets ready. There you go. You got the terminologies right there.
This will be reposted.
We will bring Just John McKinn back.
Yeah.
Part 2, crypto, next week. We're going to dive more into it. Thank you again for taking the time out.
Thank you.
Dog over there, wherever. Yep, dog right here, just kind of like nipping at you, like, hey, play with me the whole time. And again, I appreciate you. Love you to death.
Yeah, thank you.
And good seeing you again. And we will catch you back again next week. 7 o'clock Eastern Standard Time. We're gonna make it happen, people. We'll have Just John.
This will be reposted in like 10 minutes. 2 Point Happy Hour live.
It will be reposted.
Check it out.
Once again, contributor, Sakarangis Media Group. We have about 16, 17 podcasts. Each podcast has their own days, has their own times. Pretty much streaming every day of the week. Check us out, Sakarangis.com. You'll see all of the cryptos over there. You'll see all of the podcasts over there. Including ours talking about cryptocurrency. But check us out once again, an SMG production. We will see you next week. We out. Thanks again.
I'm out.
Peace.
Out of drink, out of time. See ya.
All right.